Hello and welcome to another trades and tutorials video. In this video, I'm going to look at how to use the opening range to buy near the low of the day. I'm going to answer a question that I get quite frequently, which is, how can you use the opening range for swing trades? And I'm going to give you some examples of trades that I've taken in the last 2 days just to demonstrate how sometimes it just pays to be patient, look for some setups, and you can get some great day trades and some great swing trades. But this is a quick video. I'm not going to give you an entire trade plan here. So if you haven't already found the recent ebook that we put out on how to buy near the low of the day, I put a link underneath this video, so make sure you get that. And I'm also going to do a webinar on it this week as well, so keep your eyes open for that. And again, if you get the ebook down below, you should be able to find a link to the webinar as well, as long as it hasn't passed. Now, the other thing you might want to know how to do with this video, if you're watching this on YouTube, please subscribe so that you can get our videos as soon as they come out here. But also, you may want to change this to HD. So there's a little settings icon down here somewhere that you can just click on and then change the setting to HD and then restart the video, and everything will be much clearer, and I think you'll really like it. So with that, let's get started. As you can see or have seen on my charts here, we've got two charts. The first one I'm going to point to is on the left. This is the Qs, and the other one is IBB, which is on the left. Sorry, Qs is on the right, IBB on the left. And the time period I'm focused on is yesterday and again what is today. But the importance of yesterday is it comes after the big down day that was Friday. Now, if we look at the Qs, you can see that there was a big gap down underneath the 50, which is this magenta line, really looked ugly. And if we go look at IBB, on the other hand, on that same day, yes, it gapped down. It had a pretty ugly red bar, but more or less it held up pretty well. Here's the 50. It's in great shape. In all honesty, I have my eyes on IBB because it's part of our ETF product, so it's one of the stronger ones, and therefore not only do I hold a core position in it, but I like to trade around it. Now, that brings us to, how does the opening range have anything to do with swing trades? Well, the day I'm going to focus on is the next day. So the day after the big down day, the day when the Qs gapped higher and they just pretty much went straight up, and so did the other indexes. So even on days like this, sometimes you'll find a stock that it's still in good shape on the daily, and it gets a little weak, and you can pick it up close to the low of the day just by using the simple tactics of the opening range. So for those of you who don't know what the opening range is, for this particular video, the opening range is going to be the first 30 minutes of the day. And again, if you really have no idea what the opening range is, then please get the free ebook that is on the bottom of this page, and that will explain everything you need to know, and also explain a lot of what I'm going to show you right here. So the idea here with the opening range is there are a couple really simple patterns you can look for near that bottom that gets put in the first 30 minutes of the day. So the first 30 minutes of the day, this is over on this day here. So you can see not only are we still above the 10-day moving average, but we haven't taken out the prior day's low. And IBB just pulls back to that low of the day, and then it puts in this pattern right here on this green up bar. And that green up bar is what I call a higher candle close. It closes over the prior bar. And the prior bar was at or near the low of the day and near the opening range low. And when you get that pattern in the context of the right daily and in the context of a nice downtrend, it makes for a really easy to identify entry and a really easy to identify stop. The stops are really tight generally compared to what you're going to look for in terms of the objective of your trade. And this is a good example of how the stock should act once you get that pattern and it moves higher. Now, there's a couple other things you want to look for in here. I'll go into that in the webinar, but for all intents and purposes, if once you can identify that pattern near the opening range low in the context of a good daily chart, you are in great shape. Now, So the question is, well, how does this apply to swing trading? Now, for day trading, I think it's fairly obvious, right? If you can buy near the low of the day, so this is where we were talking about being a buyer. That is where I was a buyer. And you can have a stop down near the low of the day. That's a nice tight stop. And for a day trader, your target is right up here at the high of the day, and at least an easy target. And you can see the reason I like this one is because this distance is about 1/3, or I should say this distance, about 1/3, certainly less than half of what a good profit target would be. So that's great for a day trade. Now, as it turns out, it didn't make it all the way up there, and at the end of the day I actually lightened up a little bit because it didn't make it all the way up there, but then I got to hold the rest overnight and enjoyed a nice pop today because I went home with a profit. All right, now I don't always go home with a profit. I'll give you an example of the same day stock that I got out of completely because I wasn't going home with a profit, so I didn't feel like I wanted to take it as a swing. The point here, though, is that I get into IBB initially knowing that if it goes my way, I am going to hold it, or at least some of it, for a swing profit. And if I sell half, it means I took out some profits. And even if it were to gap all the way down to my stop, it would have been a break-even trade. So those are the kind of odds I like, and all it takes is understanding, which one of these patterns near the low of the day are best to take. So here's an example, same day, different stock, um, Morgan Stanley. Now, why am I looking at Morgan Stanley? I'm looking at Morgan Stanley really for a breakout of this whole area in here, right? So it broke out and now it's pulled back. Now, yesterday, Morgan Stanley announced earnings, gapped higher, and it sold off. Normally, I'm not a big fan of buying stocks that are dipping after they announce earnings, and so I normally wouldn't do that. But the day was so strong yesterday overall in the market that I thought maybe it could just reverse, and I would again be in at a good price. And that's my initial entry for what hopefully would be a breakout. Now, it doesn't look like it's going to happen, but here's exactly why I like this particular approach to this trade so much. Let's take a look at Morgan Stanley yesterday. For those of you who have already read the ebook or you catch on quick, you can see this is the pattern again, low of the day, higher candle close within the opening range. And what you don't really see here is it lines up nicely with some daily support levels. So I got in here, looked like I was doing okay, but by the end of the day, it really didn't go anywhere and wound up coming back to a break even for me. So I got out of the whole thing. All right. Now, obviously, I would have done better had I not gotten out and then sold it against the high of the opening range. That's a different pattern, but that isn't what I did. So my point here is that even when it didn't work out, it wasn't so bad. Now, of course, some are going to get stopped out, and I was willing to take the risk down to here, but again, if this is my basic risk and this is even my short-term profit target, it's a good risk-reward ratio. And let's look at one more example, and then I'll let you go. So today, First Solar. All right, so First Solar, and in fact, if you are in our some of our other services, probably seen a video that I talked about First Solar when it broke out of this consolidation here. And my take on it there was, let it pull back. Let's see if we can get some good opening range reversal trades. And so today was exactly that. So today I was a buyer against the low of the day. And my thought, just like with IBB, just like with Morgan Stanley, is, I could get a good day trade out of this, or I could be really well positioned and hold some for a swing as well, which is what I'm going to do because this one worked out well today. Again, I'm hoping this is going to break out, that this breakout here is going to continue, but I don't want to buy it way up here if I don't have to. I wait and buy near the low of the day. So here's how it worked out today. And with this being the third example, some of you probably are going to see it even before I explain it. So here's my low of the day, or I should say my opening range low. And notice one other thing. As this sold off today, it never took out prior bars high until we finally got that pattern that I'm looking for, and this is the low of the day. So if I had a stop in here and an entry around here, and even if I was a day trader, that's just the high of the day as a first set of objectives, that looks pretty good. And then, as you already know from the daily chart, I didn't pick this randomly. I picked it because if it continued to go higher, it was going to look good as a swing trade. So now I'm in here. I'm holding it for a swing trade. If I wanted to, I could have sold some so that even if it gaps down on me, the overall position would be in good shape. But the key here to all this really is I'm getting in at a great price. And why is it a great price? I can use the low of the day as my stop. So if all this sounds interesting, this is just one slice of what you'll find in the ebook linked below and what you'll find in the upcoming webinar. If you'd like to learn more, if not, I hope you got a lot out of this video, and I'll see you in the next Trades and Tutorials video.